Analyzing Nvidia Corporation with Vinge GPT.
Welcome back, investors. Welcome to a new video on our YouTube channel, vingegpt.com. So today the company we'll be speaking about is Nvidia. So you may know Nvidia. It's today actually one of the largest market caps in the world. Actually, a couple of days ago, it surpassed even Microsoft and Apple in terms of market capitalization. And Nvidia, I mean, for those who would not know, they are selling GPUs, so graphical processing units. That's like a microprocessor that is actually optimized for let's say calculations, which includes gaming, which includes now today in the era of artificial intelligence. Actually there is a huge demand for the GPUs of Nvidia compared to the more traditional CPUs of Intel Corporation. As I already mentioned in the previous video, so in this format of let's say YouTube videos, as a lot of you have been asking that we publish much more videos, I'm showing you side by side. On the left hand side you have like the information screen. On the right hand side I'm showing you how to use Vinge, which is our custom GPT. So first things first, let's already ask Vinge what is the latest share price of Nvidia, because the conversation that we want to have today is actually if Nvidia is overvalued or undervalued, and I'm going to show you how to use Vinge for that. So on the left hand side, I mean, if you remember, one of the things that I'm expecting from serious investors and not speculators, that you understand a little bit the businesses that you invest into, as I've been learning from Warren Buffett and Charlie Munger as well. So you need to be able to go and to navigate on the investor relations website, and from there actually understanding, I mean, where are the revenues coming from, what is happening lately. So you see, if I go on the investor relations website on the left hand side, you see here that the revenues have been growing steadily. And when you look also at the split of revenues, you see here that of course here the Nvidia document shows you the revenue growth for the last, let's say, 8 quarters. You see actually that they have nearly multiplied by 9 their revenues, in fact, just in the data center space, so which is a lot. And you see here that the total revenues have been nearly multiplied by 4. So there is a lot of demand on Nvidia, which explains why they have been growing like crazy on this. So let's go here on the right hand side. You see that Vinge has shown us to replying to our prompt, what is the latest share price. We could actually ask what is the date of data, and I leave the typo, don't worry about that. Vinge knows how to handle that. What is the date of data? It should say June 28th, because we're updating all data points for our nearly 1,600 companies every Friday. Right, so it confirms it's June 28th. So what we want to do now is perform a level 1 analysis of the company. And so, I mean, for those who did not do the Art of Value Investing training on Udemy, but those who are interested in understanding how value investing works, I strongly recommend you to go on Udemy and take the Art of Value Investing training, where I've been creating a course in 2020, which explains how to do value investing and trying to avoid losing money on the stock exchange. And so the level 1 analysis is kind of the fundamental screens. And we have pre-programmed Vinge, because before you had to do this in Excel file or do it manually, but we have programmed actually Vinge to do this analysis for us, and also to do for us the type of assessment and analyzing, I mean, when it has the results, how to do the interpretation of, amongst others, a couple of financial ratios that we are asking in terms of fundamental screens. So let's wait until Vinge comes back with the results. Have the feeling that this morning the OpenAI platform that is supporting Vinge is a little bit slow. I'm not sure why. You see it says analyzing, and yeah, it kind of loops. I'm just gonna check if they don't have an incident going on, because today we fully rely on OpenAI actually. So there is no incident going on for the time being, at least not a declared incident. So let's wait for Vinge to provide the analysis here.
Do not forget to like this video and subscribe to this channel.
Okay, here it comes. So you see, I mean, grabs a couple of ratios that we have asked actually, and this is part of our level 1 method, or the level 1 screens that are part of our method. So first of all, it grabs the data from its investment universe, and from there, in fact, it gives an analysis. So let's look at the analysis. I will just wait until the results are ready. So first of all, on the mode, it says that Nvidia has a wide mode, and it's indicating a strong competitive advantage. The price to earnings is pretty high at 71. Price to free cash flow is at 77.26, which is also very high. It says, I mean, the stock may be expensive relative to its free cash flow, and it says the same, the stock may be overvalued based just on price to earnings. And remember, in the course, I'm saying you should never invest your money just based on one ratio. So I mean, they don't provide any dividends. Capital spending is pretty low. They spend 1.2 billion. Return on asset is very high, so I mean the profitability is extremely high. In terms of solvency, debt to equity and cash to debt look very nice. I must say, I don't think that Nvidia will go bankrupt. And also one thing that we have added in Vinge is actually to compare the company's ROIC with the industry average ROIC, which is 11.42%. One of the things, I mean, I would like to know also is, can you tell me what is the ROIC for Intel Corporation? I leave the typo, and AMD. So I want to know what's the ROIC, because it says that the industry average is 11.42, and we see a huge ROIC actually on Nvidia. With, I mean, I'm always saying that 8 to 10% consistently over 5 to 10 year period is good. And you see here that for Intel and AMD, despite the typo, it says actually that the return on invested capital is for Intel 268% and for AMD 531. So, and I'm going to ask now to perform a level 2 analysis, which is basically calculating for Nvidia. Sorry, it's basically to calculate the intrinsic value of one share based on various methods for Nvidia. And what you already see is that in the prompts, I mean, for those who did the training, or for those who know how to calculate intrinsic value, for example, based on free cash flow to the firm or discounted future earnings, I'm not now providing any cost of capital assumptions or growth rate assumptions. I'm just asking Vinge, do me a level 2 analysis. So level 2 is, I mean, for those who would have done the training, you know that this is basically calculating the intrinsic value per share using various methods. And you're going to see actually that without providing assumptions, Vinge knows which default assumptions actually to use. So here comes the results. So it says that the intrinsic value DCF per share for 30 years is 28.05. For discounted future earnings, 30 years is 30.37. And also in the latest update of Vinge, we are actually also calculating the 10-year and 20-year intrinsic values, just in case people would be interested in that as well. Right. So so here what I'm gonna ask actually Vinge is, which assumptions have you used for this? I don't care about the typo. And it should say 7% cost of capital, 3% growth rate, and 30-year. We do not add a terminal value. That's my choice. Teaching value investing, I don't add a terminal value to the discounted cash from discounted future earnings method. So some people would now say, yeah, but can you maybe 3% growth rate? That's not high enough for Nvidia over a 30-year period. So you could actually take Vinge and say, okay, could you recalculate the intrinsic values with a growth rate of, let's say, for example, 10% for the years 1 to 10, sorry, typo, 1 to 10, and let's say 5% for the years 11 to 30. And it should actually provide now, well, it will redo the calculations, but instead of assuming a 3% growth rate flat over the next 30 years with a cost of capital of 7%, I'm just saying now, can you adjust a little bit your calculation by let's say using different growth rates with 10% for the first 10 years and then 5% for the years 11 to 30. And here come the results. So you see, and I remember the values, so those values are correct. So it says that the DCF per share for 30 years is $53.47 and the discounted future earnings is 57.91. Of course, you could change the cost of capital. You could continue playing with the model. I'm gonna stop the video here, but again, I wanted to show you, and basically my conclusion conclusion is that Nvidia, even with a 10%, and I will now actually even take the very overestimated thing is, could you recalculate the intrinsic values with 10% over for the years 1 to 30, because that's really very, very, very high growth rates. As a value investor, I do not believe, and there has been no proof, and even in the past people were saying this about Amazon, but Amazon at a certain point in time declined as well, and that's typically in any type of, let's say corporate life cycle, that a company cannot sustain 10% growth rate for 30 years. So here I really took kind of what I feel is something that cannot happen, is having a company that grows for 10% every year, every quarter for the next 30 years. And actually you see that the intrinsic value, both on discounted cash flow and discounted future earnings per share, even does not reach the $123 today based on today's earnings. So some people would say, yeah, but I still believe that Nvidia will grow. Time will tell us. Those who know me, I'm not the guy who does forecast, but I believe that today Nvidia is really overvalued, and we saw it. So we see it here with a 10% growth rate over 30 years. And we also saw it on the price to earnings, with a price to earnings of 71 and the price to free cash flow 77. You are buying 70 years of earnings and 77 years of free cash flow today. So I mean, for me as a value investor, that is really, really just too high. But again, I'm not soliciting you now either to sell an Nvidia or to buy Nvidia. I'm just trying to show you how actually you should behave as an investor, what you need a minimum to do very quickly here about understanding where the revenue is coming from. And on the right hand side, I'm showing you actually how to use Vinge as a custom GPT for investors. With that, thanks for your attention, and talk to you in the next video.
VingeGPT.com